Question 1. Policy provisions and riders. Which of the following correctly describes the purpose of a waiver of premium rider in a long-term disability insurance policy? A. It guarantees that the insured can purchase additional coverage in the future without evidence of insurability. B. It waives the premium payments if the policyholder becomes disabled, ensuring coverage continues during the disability. C. It increases the benefit amount annually to account for inflation or rising costs. D. It refunds a portion of the premiums paid if the policyholder never files a disability claim. Answer. B. Explanation. The waiver of premium rider is a provision that allows the policyholder to stop making premium payments if they become totally disabled while still keeping the coverage active. This rider is critical as it ensures the financial burden is reduced when income is lost due to disability. Option A. This describes the future purchase option rider. Option C. This describes the cost of living adjustment COLA rider. Option D. This describes the return of premium rider. Relevant law guidelines. Massachusetts regulations require clear disclosure of riders and benefits to ensure consumers understand these additional provisions. Question 2. Claims management and settlement. An individual has a group disability insurance policy through their employer. After becoming disabled, they receive disability benefits from both their group policy and Social Security Disability Insurance (SSDI). What happens if the total benefits exceed the individual's pre-disability income? A. The group policy benefits will be reduced to prevent overinsurance. B. SSDI benefits will be terminated. C. The insured is allowed to keep the excess benefits without adjustments. D. Both SSDI and group policy benefits will proportionally reduce to match pre-disability income. Answer A. Explanation. Most group disability policies include an overinsurance clause or integration provision to prevent an insured from receiving benefits that exceed their pre-disability earnings. If benefits from SSDI and the group policy exceed the income, the insurer will reduce the group policy benefits. Option B. SSDI benefits are not terminated based on group insurance payments. Option C. Overinsurance prevention rules prohibit this. Option D. Only the group insurance policy adjusts. The SSDI does not change. Relevant law guidelines. Massachusetts consumer protection laws ensure clear disclosures regarding overinsurance provisions in group policies. Question 3. Scenario-based. Underwriting disability insurance. Scenario. Jane Anderson is a 35-year-old self-employed graphic designer applying for individual long-term disability insurance. During the underwriting process, the insurer notices that Jane reported her income inconsistently over the past 3 years, with significant fluctuations. Her medical exam is clean and she works from home. Which of the following underwriting decisions is the insurer most likely to make? A. Approve the policy with a standard premium but exclude claims for mental and nervous disorders. B. Approve the policy but limit the benefit amount based on Jane's verified average income. C. Decline the policy due to fluctuating income and lack of occupational stability. D. Offer a graded benefit period that increases only after a specified time based on income verification. Answer. B. Explanation. During financial underwriting, insurers assess income stability and the ability to justify the requested benefit amount. In Jane's case, her fluctuating income will likely result in a benefit cap based on her average verified income over the last few years. Option A. Exclusions are related to health conditions, not income fluctuations. Option C. Fluctuating income does not automatically result in policy denial unless no income can be verified. Option D. Graded benefits are not typically tied to fluctuating income. Relevant law guidelines. Massachusetts underwriting rules require insurers to verify income and assess financial stability for self-employed applicants to prevent overinsurance or misrepresentation. Question 4. Disability definitions and qualifications. Which of the following best describes a residual disability benefit a long-term disability insurance policy? A benefit paid when the insured is unable to perform any occupation. B. A benefit paid when the insured experiences a total loss of income. C. A benefit paid when the insured could work part-time but earns reduced income due to disability. D. A benefit paid when the insured meets the presumptive disability criteria. Answer. C. Explanation. Residual disability benefits are designed to assist policyholders who can return to work in a limited capacity but suffer a loss of earnings due to their disability. It bridges the income gap while encouraging partial recovery in employment. Option A. This describes the any occupation definition of total disability. Option B. Total loss of income aligns with total disability, not residual benefits. Option D. Presumptive disability applies to specific severe conditions like blindness or loss of limbs. Relevant law guidelines. Massachusetts requires insurers to clearly define residual disability benefits and their role in replacing partial income loss. Question 5. Policy provisions and riders. Under the time limit on certain defenses provision, how long after a policy's effective date can an insurer void the policy for material misrepresentation in the application day? 6 months. B. 1 year. C. 2 years. D. The insurer can void the policy at any time if misrepresentation is proven. Answer. C. Explanation. The time limit on certain defenses provision allows an insurer to contest a policy due to material misrepresentation within the first 2 years. After this period, the policy generally becomes incontestable except for fraud. Option A and B, incorrect time frames of 2 years, is standard in most states, including Massachusetts. Option D, policies cannot be voided indefinitely for unintentional misrepresentation. Fraud, however, remains contestable at any time. Relevant law guidelines. Massachusetts follows the standard NAIC model that imposes a 2-year limit for material misrepresentation, protecting both insurers and policyholders. Question 6. State and federal regulations. In Massachusetts, which of the following disability insurance policy exclusions is prohibited by law? A. Excluding claims related to self-inflicted injuries. B. Excluding claims related to pre-existing conditions for a specified period. C. Excluding claims related to mental and nervous disorders. D. Excluding claims based on hazardous occupations without proper disclosure. Answer. D. Explanation. Massachusetts consumer protection laws prohibit insurers from excluding coverage for hazardous occupations unless clearly disclosed during the application process. This ensures transparency and fair treatment of policyholders. Option A. Self-inflicted injuries are a standard exclusion. Option B. Pre-existing condition exclusions are allowed but regulated with time limits. Option C. Mental and nervous disorders are often excluded or limited, but this is legally permissible. Relevant law guidelines. Massachusetts mandates transparency in disability insurance contracts, preventing hidden exclusions. Question 7. Scenario-based. Claims management scenario. Michael Thompson, a construction worker, files a long-term disability claim after sustaining a back injury. He has a group policy through his employer with a 90-day elimination period and a benefit of 60% of his pre-disability income. However, Michael starts receiving workers' compensation benefits 2 months after his injury. What impact will this have on his disability insurance benefits? A. Michael's disability benefits will be reduced due to the workers' compensation benefits. B. Michael's disability benefits will remain unaffected by workers' compensation. C. Michael will receive full disability benefits and workers' compensation without any adjustments. D. Michael's group disability insurance policy will terminate due to workers' compensation eligibility. Answer. Explanation. Group disability policies often include integration provisions to prevent overinsurance. When Michael begins receiving workers' compensation benefits, his disability benefits will be reduced so the total combined benefits do not exceed the pre-disability income. Option B. Incorrect group policies integrate workers' compensation benefits. Option C. Overinsurance is prohibited. Option D. Workers' compensation does not terminate the group policy. Relevant law guidelines. Massachusetts law allows insurers to integrate benefits to prevent policyholders from receiving more than their pre-disability earnings. Question 8. Underwriting disability insurance. During financial underwriting, which of the following is most critical in determining the maximum benefit amount for an individual disability insurance policy? A. The applicant's age and gender. B. The applicant's health history. C. The applicant's verified income. D. The applicant's occupation classification. Answer. C. Explanation. Financial underwriting focuses on the applicant's verified income to ensure that disability benefits do not exceed a reasonable replacement percentage, e.g. 6070% of pre-disability earnings. Option A. Age and gender impact premiums but not benefit limits. Option B. Health history affects insurability and exclusions, not benefit maximums. Option D. Occupation classification influences risk assessment but not directly the benefit cap. Relevant law guidelines. Massachusetts regulations require insurers to assess financial stability to prevent overinsurance and fraud. Question 9. Ethical and legal responsibilities of agents. An insurance agent recommends a new disability insurance policy to a client without informing them that their existing policy may provide similar or better coverage. What ethical principle has the agent violated? A. Suitability requirement. B. Disclosure of commissions. C. Replacement regulation. D. Fiduciary responsibility. Answer: C. Explanation. Failing to inform a client about the implications of replacing an existing policy violates replacement regulations. Agents must provide full disclosure including comparisons of benefits, limitations, and costs. Option A. Suitability is broader and focuses on recommending appropriate policies. Option B. Disclosure of commissions relates to agent compensation, not replacement. Option D. Fiduciary responsibility involves acting in the client's best interest but does not specifically address policy replacement. Relevant law guidelines. Massachusetts imposes strict requirements for policy replacement to protect consumers from unsuitable or unnecessary policy changes. Question 10. Special topics in disability insurance. Which type of disability insurance is most appropriate for covering fixed business expenses like rent and utilities if a business owner becomes disabled? A. Key person disability insurance. B. Business overhead expense (BOE) insurance. C. Individual long-term disability insurance. D. Disability buy-sell agreement insurance. Answer: B. Explanation. Business overhead expense (BOE) insurance is specifically designed to cover fixed business expenses such as rent, employee salaries, and utilities when a business owner is disabled. Option A. Key person insurance protects the business from losing a valuable employee. Option C. Individual long-term disability insurance replaces personal income, not business expenses. Option D. Disability buy-sell insurance funds the purchase of a disabled partner's business interest. Relevant law guidelines. Massachusetts allows businesses to use BOE policies as part of financial planning to ensure operational continuity during a disability. Question 11. Policy provisions. In a disability income policy, what is the purpose of the elimination period? A. It determines the maximum duration of benefits. B. It is the period during which no benefits are paid after the disability begins. C. It establishes the percentage of income replaced by the policy. D. It defines the period after policy expiration for filing claims. Answer: B. Explanation. The elimination period is essentially a waiting period that starts when the disability begins. During this period, no benefits are paid. It helps insurers reduce short-term claims. Option A. This refers to the benefit period, not elimination. Option C. This pertains to benefit percentage. Option D. This describes a claims filing deadline unrelated to the elimination period. Question 12. Claim settlement. Under Massachusetts law, how long does an insurer have to acknowledge receipt of a disability claim after it is submitted? A. 10 business days. B. 15 calendar days. C. 30 calendar days. D. No specific time requirement. Answer A. Explanation. Massachusetts law requires insurers to acknowledge receipt of claims within 10 business days to ensure timely communication and efficient processing. Options B and C incorrect. These are not the statutory requirements in Massachusetts. Option D. Insurers are required to respond promptly under state law. Question 13. Own occupation versus any occupation. Which of the following best describes the lone occupation definition of disability? A. The insured is unable to perform any job for which they are reasonably suited. B. The insured is unable to perform the duties of their specific occupation. C. The insured is unable to work for at least 30 days. D. The insured qualifies for benefits regardless of their ability to work. Answer B. Explanation. Lone occupation means the insured cannot perform the duties of their specific occupation even if they could work in another job. This definition is favorable to policyholders. Option A. This aligns with any occupation and not lone occupation. Option C. Time frames do not define the nature of disability. Option D. Incorrect, as benefits require evidence of disability. Question 14. Pre-existing conditions. How long can an insurer exclude coverage for a pre-existing condition under a disability income policy in Massachusetts? A. 6 months. B. 12 months. C. 24 months. D. No exclusions are allowed. Answer B. Explanation. Massachusetts law allows insurers to exclude pre-existing conditions for up to 12 months after the policy's effective date, provided it was diagnosed or treated within a specified look-back period. Question 15. Taxation of benefits. Disability benefits from an individual disability income policy are A. Always taxable as income. B. Tax-free if premiums are paid with after-tax dollars. C. Tax-free only if the benefit amount is less than 50% of income. D. Always exempt from taxation. Answer B. Explanation. Disability benefits are tax-free if the premiums are paid with after-tax dollars. This is because the policyholder already paid taxes on the money used for premiums. Question 16. Group policy characteristics. Which of the following is true regarding group disability insurance? A. It typically requires medical underwriting for all employees. B. It provides benefits that are taxable if premiums are employer paid. C. It always includes an lone occupation definition of disability. D. It provides benefits only for short-term disabilities. Answer B. Explanation. Group disability insurance benefits are taxable if the employer pays the premiums because the premiums were paid with pre-tax dollars. Question 17. Scenario-based. Policy exclusions. Scenario. Karen owns an individual disability insurance policy. She was injured while participating in an illegal drag race and is now unable to work. Will Karen receive disability benefits? A. Yes, as long as her injury meets the policy's definition of disability. B. Yes, but only partial benefits due to the nature of the activity. C. No, because her injury occurred during an illegal activity. D. No, unless the activity was disclosed and approved in advance. Answer C. Explanation. Most disability policies contain exclusions for injuries sustained during illegal activities. Since Karen was participating in an illegal drag race, her injury is excluded. Question 18. Cost of living adjustment rider. What is the primary benefit of adding a cost of living adjustment rider to a disability income policy? A. It increases the monthly benefit by a fixed percentage each year. B. It allows benefits to keep pace with inflation during a disability. C. It provides an additional lump sum benefit upon disability. D. It waives premium payments if the insured becomes disabled. Answer B. Explanation. The COLA rider ensures that disability benefits increase to keep pace with inflation, protecting the insured's purchasing power over time. Question 19. Rehabilitation benefits. Which of the following is a key feature of the rehabilitation benefit in a disability insurance policy? A. It provides additional benefits to cover training costs for a new occupation. B. It pays a lump sum for permanent disabilities. C. It increases the benefit amount for temporary disabilities. D. It waives the elimination period for recurrent disabilities. Answer A. Explanation. Rehabilitation benefits help pay for retraining or educational expenses to assist the insured in returning to work, often in a new occupation. Question 20. Waiver of premium. What happens under the waiver of premium provision in a disability income policy? The policyholder receives reduced benefits if they cannot pay premiums. B. Premiums are waived after the insured becomes disabled for a specific period. C. The insurer reduces premiums if no claims are filed within a year. D. Premium payments are deferred until the elimination period ends. Answer B. Explanation. The waiver of premium provision waives the policyholder's obligation to pay premiums after a specified period of total disability, ensuring coverage continues without financial strain. Question 21. Policy riders. What is the purpose of the future purchase option guaranteed insurability rider in a disability insurance policy? A. It guarantees benefits even if the insured changes occupations. B. It allows the insured to purchase additional coverage without evidence of insurability. C. It eliminates the elimination period for future claims. D. It provides a lump sum payout upon a permanent disability. Answer B. Explanation. The future purchase option rider allows the insured to increase their disability coverage in the future without undergoing additional medical underwriting, protecting insurability as income grows. Question 22. Short-term disability versus long-term disability. What is the primary difference between short-term disability (STD) and long-term disability (LD) policies? A. STD pays benefits for a shorter duration and typically starts sooner after disability occurs. B. STD has higher benefit amounts than LTD policies. C. LTD pays benefits only if the insured is permanently disabled. D. LTD policies exclude pre-existing conditions. Answer A. Explanation. Short-term disability policies typically start paying benefits soon after disability begins but only last for a short period, e.g. 6 months, while LTD policies start later and can last years. Question 23. Residual disability. The residual disability benefit pays a portion of the disability benefit when a. The insured cannot work in any occupation. B. The insured can work but has a loss of income due to disability. C. The insured has fully recovered but files a claim. D. The insured becomes permanently disabled. Answer. B. Explanation. Residual disability benefits provide partial benefits if the insured can work in a limited capacity but suffers a loss of income due to their disability. Question 24. Scenario-based. Group policy coverage scenario. Tom works for a company that provides group disability coverage. His employer pays 100% of the premiums. If Tom becomes disabled and begins receiving benefits, how will the benefits be taxed? A. Benefits will be tax-free because Tom is the beneficiary. B. Benefits will be fully taxable as income. C. Benefits will be partially taxable based on income level. D. Benefits will be taxable only if they exceed 50% of his income. Answer. B. Explanation. When an employer pays the premiums for group disability insurance, the benefits received by the employee are considered taxable income because the premiums were paid with pre-tax dollars. Question 25. Coordination of benefits. The coordination of benefits provision in a disability policy is designed to A. Allow an insured to collect benefits from multiple policies. B. Prevent overinsurance by reducing benefits if other coverage applies. C. Guarantee full benefits from all disability policies held. D. Prioritize the payment of benefits based on policy start dates. Answer. B. Explanation. Coordination of benefits ensures that the insured does not receive more than 100% of their income when multiple disability policies are in place. Question 26. Partial versus total disability. Which of the following scenarios would most likely qualify as a total disability? A. An insured can work part-time with a 30% loss of income. B. An insured is unable to perform any duties of their occupation. C. An insured is unable to work in a related profession but can perform other jobs. D. An insured is receiving rehabilitation training for a new occupation. Answer. B. Explanation. Total disability occurs when the insured cannot perform the essential duties of their occupation or any occupation depending on the policy. Options A, C, and D describe partial or rehabilitative situations. Question 27. Recurrent disability. What is a recurrent disability in the context of a disability insurance policy? A. A disability that arises from the same or related cause within a specified time frame. B. A disability that occurs repeatedly for unrelated medical conditions. C. A disability that requires multiple elimination periods for benefits. D. A disability that lasts for fewer than 30 days. Answer A. Explanation. A recurrent disability occurs when the same or related disability reappears within a specific time frame, often without requiring a new elimination period. Question 20. Scenario-based. Premium refund scenario. Sarah purchases a disability insurance policy with a return of premium rider. She never files a claim during the policy period. What happens under this rider? A. Sarah forfeits all premiums paid. B. Sarah receives a refund of all premiums paid minus administrative costs. C. Sarah receives partial benefits equal to her premiums. D. Sarah's premiums are carried forward to extend her coverage. Answer. B. Explanation. The return of premium rider refunds the premiums paid if no claims are filed during the policy term minus any applicable administrative fees. Question 29. Waiting period in group policies. What is a typical waiting period for eligibility in a group disability insurance policy? A. 7 days. B. 30 days. C. 90 days. D. 1 to 6 months, depending on the employer's plan. Answer. D. Explanation. The waiting period or eligibility period in group disability insurance typically ranges from 1 to 6 months, depending on the employer's plan and policy provisions. Question 30. Accidental death and dismemberment (AD). How does accidental death and dismemberment (AD) coverage relate to disability policies? A. It pays benefits only for temporary disabilities caused by accidents. B. It provides benefits for death or loss of body parts caused by accidents. C. It covers disabilities resulting from illnesses only. D. It replaces long-term disability coverage when added as a rider. Answer. B. Explanation. AD coverage provides a lump sum benefit if the insured dies or loses body parts. G. Lim's eyesight due to an accident, it is typically added as a rider to disability policies.